Okay, everyone. Well, today we're going to dive into the market madness and see what Bitcoin has been up to. So, what does the plan look like? Well, first of all, we're going to get a global perspective of what's going on in the market, what the long term trends are. And then after that, we're going to look at some of our recent trades just to see how we've been doing so far. And then post that, well, we're going to plan, our trades moving forward. Our trades for Thursday, our trades for Friday, and potentially our trades going into the weekend. Well, let's get into it. The current fair price of Bitcoin stands at an impressive 51,055. We're still in the 50s range. We're consolidating within, this range. And some of us think we're going back to the all-time highs. Some of us think we're going to blast through the all-time highs. Also, some of us think we're going all the way down to the 30,000 region. Wow. We're going to look at what the chances are and the possibilities are for each and every one of those ideas. All right, Bitcoin's seen a nice little dance between this range. It's going up, it's going down, it's going up, it's going down. We're not quite sure where it's going to break. Is it going to break out or is it going to break down? All right. So let's just get a global view of what's going on, as I said. So first things first is we have to be aware that at the moment on a monthly, we are, in bearish market structure. Now, what does that mean? It means we printed a high, we printed a lower high, we printed a high again, we've sort of wicked that top, and then we've rallied down, we've broken market structure, and we've printed a low. Because we've had a break in market structure, what's the expectation of order flow? The expectation of order flow is for, a retracement leg. A retracement leg is going to print a lower high, for some further downward action. Now, where is that turning point going to take place? Millions of traders are trying to figure that out. Okay, is it going to happen here? Is it going to happen here? Or are we going to blast off into bullish market structure again? That's what we're waiting on. But before this happens, you have to remember, we need markets to facilitate that move. We need to go from bullish market structure, as we are at the moment, to bearish market structure, which means the 1 hour has to start looking bearish, the 4 hour has to start looking bearish, the daily has to start looking bearish, the weekly has to start looking bearish, before we really get that flush down if it's going to happen. As for now, we're still in bullish structure. We did have a slight blip. Where was that blip? We had a slight blip over here where the 4 hour went from green to red, so it changed bearish, but shortly after it reversed and rallied up, and it continued into where we are at the moment. So what does a long-term global outlook look like? We have to wait and see. We have to wait and see whether we're going to continue breaking up, or are we going to get a breakdown on a 4 hour to begin with. All right, so there we have it. That's what the globals look like. Like I always say, in trading, you have to plan your trade and trade your plan. And gone are the days when you look at a chart and you flip a coin, long or short. You don't have to do that anymore. You've got the tools, you've got the techniques, you've got the knowledge, so there's no need to gamble. All right. With my teachings, you can confidently say, well, this is what I think the market's going to do, and based on that, this is the trade I'm going to place. So let's plan our trades and let's trade our plans. But first things first, let's look at our recent setups and let's see how they've been doing. So what I'm going to do is go on the 12-minute just to get a more myopic view, an internal view of what's going on. Okay. So what's happened so far in this range? Well, we had our old range, we broke out of that range, and we came into a new range. We had our range high, we had our range low. And what do ranges do? Ranges oscillate, ranges rotate from top down, top down, top down. So that's what ranges do. We all know this. Okay, so where were we looking for earlier this week for our trades? Well, the first thing, as soon as we set that initial high, I said on Monday, I believe it was Monday the 19th of February, or earlier than Monday actually, but let's have a look. I think around here, there we have it. So around here we said this is our plan for the week. We're looking for a short from this level here. This is a prior zone. We're looking for a long from this level, and we're going to say, we said that this level marries up nicely with that 1 hour zone. All right, and we said we're also looking for a long up here. Now, silly me, right? I thought the long was going to happen before the short. I thought we were going to wick this level or tag this level before we went up, but the market listens to no man, and that's exactly what it's done. It's done what it wanted to do, so it's touched the high first before it's touched the low. But regardless, they were still both winning trades. So let's take a look at each and every one of those trades, and let's see how we were able to get in. So we'll look at the short first on the top. So what could we see over here? We could see that market was, going towards our region, our POI, our point of interest. As we approached that area, we can see that our confirmations were starting to appear. Now, what do I mean by our confirmations? What are our confirmations? Confirmation number 1. This is the most important one. Is there a change in market structure? Are we going from bullish to bearish? Now, what do I mean by change in market structure? And why is this so important? Why do I go on about this every single stream and every single video? Well, it's clearly because it's quite obvious. In order for price to go from going up to going down, there must be a change in direction, aka a change in structure. Think about it a bit like a slope. If you've got a slope, and let's say you're a skier, for those of you who ski, well, think of it like a slope. Well, what happens in a slope? Over here, we've got a picture of some nice, mountains and slopes. When you're going up a slope, the gradient is positive. You get to the peak, and then what happens after you get to the peak? The gradient becomes negative. And that's the exact same thing with market structure. As you're trending up, your gradient is positive. When you're ready to come down, you break structure and it becomes negative. So that's why we're always looking out for that break. Remember, no break, no trade. Okay? So that's why there's no point looking for a short when you're still sloping up. That's why it makes sense to make sure you've got your change in market structure first. All right? So I digress. Let's get back into it. So we were looking at our trade number 1. So what was trade number 1? Well, trade number 1 was a deflection of that range of that supply zone, and we saw our change in market structure. Market structure looks like this. We had a low, a high, a low, a high, a low, a high, and then we had a breakdown. Okay, but this was a very difficult one to enter. Why? Because we didn't get much structure on the way up. This was a very strong bull trend bar. Okay, so because we saw that, what did I say? I said, well, don't worry. Don't you worry. February 20th, I said, wait for that structure to break. Let it do what it's doing. It's going to come back up. It's going to retrace. And when it retraces, we're going to look for that retracement leg and look to enter on the breakup structure of that retracement. All right. Lo and behold, what did it do? So if we look on the 5 minute, let's just trace this. On the 5 minute, we can see we broke structure down, came nicely into that zone that we were looking out for, but I'm going to get rid of that for now. And then we rallied up, and as we rallied up, we were printing higher highs and higher lows, high highs, high lows. Okay, high, low, high, boom, break of structure. So that's where you're thinking, right, this is it. So we have that break of structure, and then we have that retracement leg. We have the retracement up as a result, and that's when you get the flush down. Okay, and that was quite a nice flush down, and that's what we're still currently seeing. So where would you have entered that trade? Right over there. Okay, you'd have rode that all the way down for a nice, 3 or 4 risk to reward, which is pretty decent, and you're looking at a good 3% move down. So that was trade number 1. All right, market cipher was also printing a bearish divergence over there. What was trade number 2? Whereas trade number 2, as we saw just now, was a long from this region. We were looking out for this region. I'm going to get rid of this. Let me get rid of the red so that the chart's not clustered. Also going to get rid of that because that's done and dusted now, out of that trade. Okay, so what happened? As price rallied down to the range low, well, we're expecting a rotation up. Did that rotation occur? Did we get a confirmation? Of course we did. Market Cipher, what were you doing? Market Cipher said, well look TJ, momentum waves are going up. Price is coming down. That is an indication that we are nearing a turning point. And lo and behold, we actually get a change in market structure. What does that look like? Well, we're going from printing lower lows and lower highs this time. Okay, I'm sure we've got something in there if you look on a lower time frame. It's a difficult one to get into. So we're going to investigate that to see perhaps what happened on the 2 minute. Did we have any 2 minute structure on that decisional leg? Okay, this was a tricky one. Why? Because there wasn't much structure to work with. So we're probably going to have to go on a 1 minute here. And 1 minute is risky business. I'm not going to lie to you. 1 minute is quite risky. So on the 1 minute, yes, we did have structure. We have a low, we have a high, we have a low, and we would have broken the structure right about here, meaning that is the retracement leg. Okay, so we would have looked to enter our trade, our long trade, right around there. Not a short trade, a long trade. So we get rid of that, enter a long right about there to ride that up. Where would we ride that up to? Well, close to that high. Okay, so we got around, stop loss has to be down there. So not a crazy risk to reward. We've got about 2.5 risk to reward. Okay, but nonetheless, Market Cipher did its thing. Market structure did do its thing, but it's a risky one because it's on the 1 minute. Okay, so I didn't take that one because that was a little bit too risky for me. So now trade number 3, well, what was trade number 3 that we were looking at? Trade number 3 was a reaction from this old demand zone. Okay, over here we were looking to wick into it and come back up. Yeah, wick into it, not close below this low, just wick into it and come back up. So let's see what's happened. Let's just have a quick recap. So as we can see, price rallies down, it bounces off this 1 minute demand, and then what does it do after it bounces off that 1 minute demand? It wicks into our zone, very tiny wick, and then it splashes up. Okay, now some of you would have entered that trade just off of that wick, but I like to wait for market structure before I enter trades like that. Okay, so whilst we've had that wick, we're currently in that zone, but we seem to be accumulating in that zone. Okay, usually I would want something like this. So we'll come in, wick, pew, we go up, and then we carry on. But we're getting some more accumulation in this zone, which is not the most bullish thing, but it could be accumulating to go up. Okay, and we also have a potential Trinity model 2 play now. What is Trinity? Trinity is basically a Wyckoff accumulation. What do we have over here? We've got arguably tap number 1, tap number 2, and perhaps this is tap number 3, but this has actually been invalidated by this wick, so perhaps this is the tap number 3. Okay, so TJ, what are you going to do? We haven't broken market structure convincingly. We've broken market structure, but it's not convincing. What do I mean by it's not convincing? Well, if we look at our market structure as we come down, we've got a low, we've got a high, we've got our wick, we come up here, which is a break. It was a break. You can see it's a tiny break, but it's not convincing. Okay, it's not the break we want, and as a result, we've come back down, and it makes sense. We're kind of just ranging in this region. Okay, so what are you going to do now? It's not a convincing break. Well, it's very simple. What I'm going to do is I'm going to wait. I'm going to wait, and I'm going to actually treat this as a range, which it is, and I'm going to look to see if we break out of the range up, I can get in on that retracement. If we break down, then I can wait for more further price action. So all is not lost. Just wait and see. Don't be too hasty to enter the trade. You've got time. Okay, there's no rush. No one's got a gun to your head saying trade right now. Okay, so just wait. Even though this is an area we're interested in, wait for the confirmations. Okay, all right, so that's it. We've gone through our trades. Now let's get a closer look. Let's get a deep dive as to what the next trades look like. Bitcoin's playing this fascinating game, on the higher time frames. I think this is a very, very, very key level. This low is a key level. Why is this a key level? Because think about it. This is a massive range. And if we were to break down from this range, that means we are officially in 4-hour bearish structure. Okay, so what do I mean by that? In terms of a schematic to show you what's going on, take this as your range. We've got our highs coming in. We were coming in like this, we tap the range high, we tap the range low, we tap the range high again, and we're flirting in this region here. We're seeing, are we going to break that low? Well, if we do, we're going to have to come all the way down here. Then we'll be looking to enter on a trade on a retracement for some further downward action. Okay, so that would be my next trade, looking to enter that short there. Okay, now how am I going to enter that short? Well, I'm going to let it break. I'm not going to chase it, let it do its thing, and then I'm going to wait patiently, and I'm going to wait and see, well, what's market structure doing as we approach that region? What's market structure doing as we approach that retracement leg? Is there a breaking structure there? If I see a breaking structure, I'm jumping in. Okay, so that's what I'm looking out for as for my next trade. So what levels and what alerts are we going to set for our next trade? Let me just tidy this up so we don't have all this clutter. I'm going to tidy this up. Okay, get rid of this, get rid of that, get rid of that. Alright, so this is it. So what am I looking out for? Alright, so we are in this old demand zone. So there is a chance that we dip into this demand zone and react off one of these levels. It's worth taking a look to see whether we have demand in these candles. Okay, let's take a look to see if we've got demand in these candles, because we could react from any of those demand zones. Let's say we have a demand zone there. That could be where we react from. Okay, so we could mark down and go further up. Bitcoin loves to do that. So make sure you're checking here for any demand. All right. Now, in the case that we break down from this level, as I just said, if we mark down, I'm looking for that retracement leg for some more downward action. But I'm going to give you a video when the time comes, when we have to do that. So that is a potential trade for myself. Now, what other level am I looking out for? Well, we've just had a second tap, arguably a third tap actually, you could say 1, 2, 3, but regardless, a tap of the range high. So what am I looking out for? Well, I'm treating this as a potential range as well. And if we come to the top of that range, I'm looking to short it off the top of that range. Okay, so my next trade would actually be over there. So I'm going to set an alert at this range high, add alert, and I'm going to say, well, I'm looking for a short off the top of that range again. Let's see if we rotate one more time. And obviously I'm looking here to see if we're going to get that confirmation for that long trade. All right, as we just spoke about earlier. Okay, and as for my short trade, well, for my short trade, I'm looking to break down. If we break down, we may react off a demand zone just to set that, lower high, and then I'm looking to enter a short off of that over there. Okay, but what am I looking out for in each and every one of these zones? We aren't just limit ordering this. We aren't just flipping the coin and saying, right, you know what, 50-50, long or short, let's go. One of them's going to work. No, that's not what we're doing. We're simply planning ahead and preparing for our confirmations. And what are the confirmations? Our confirmations are, we're going from bullish market structure to bearish market structure. So we're waiting for that change in market structure before we actually enter that trade. And it just so happens that change in market structure will also come in line with a bullish or bearish divergence on market cipher. Remember, trade responsibly, only risk a tiny stack, tiny amount of your bag, 1%, 0.5%, just so you're trading long enough for you to pick up the skills and the know-how as to how the trading game actually works. Okay, so there you have it. that's what Bitcoin looks like. If you found this useful, don't forget to follow the channel for some more recent updates. I'll see you tomorrow.